Good evening. It's Vijay here. This is the weekend review. Today is 17th of June. Today was a holiday because of Bakrid. I hope all of you enjoyed the holiday. So let's look at what happened last week and what we can expect next week. So last week the bulls seemed to be in command, specifically on Nifty, which closed near the all-time highs. Nifty closed at 23,465, which is about 67 points. Bank Nifty did not do much, though it closed 155 points up. There are a lot of activity across the board. Lots of sectors closed at all-time high. FIs were very active on Friday, for instance, and they bought about 2,200 crores. DIs also bought on that day about 655 crores. So about 2,800 crores was bought by the institutions. Now the moot point is who sold. So the third force, as I call them, seem to have again entered the market by trying to buy normal, above normal quantities. Normally the third force buys about 1,000 to 2,000 crores. Now they've gone up to close to 3,000 crores. Now, last week, while one felt it was bullish, there's so many things which should worry both the bulls as well as the bears. Now, the bulls will look forward to this week because the gift nifty talks of a 100-point up, and it is showing that tomorrow's opening will be about 23,500, which the nifty has not been able to reach. So the bulls will now look for 24,000. So everybody is talking of 24,000 is the next target. Now, well, that may be so in normal circumstances, but what we observed last week and specifically on Friday was very intriguing, which could be there could be a chance for the bears to attack and attack ferociously in the next week. Now, if you look at the futures data, Nifty futures as well as stock futures had no premium whatsoever. Now, when the market is bullish and many stocks are very bullish and forming all time highs, one would have expected that 2 weeks before the expiry that there will be a premium because the bulls would like to buy into the weekend or for the next 2 weeks at higher levels so that they expect when if you expect 24,000, so that should be child's play. Now, that has not happened. This is one of those rare cases where I have seen that everybody is bullish, but there's no premium on the futures. Now, one used to argue the premiums have been coming down because arbitrage funds have come into the market. Then, what does one explain? And then, how does one explain that there's no premium? So, the arbitrage fund can have no business to be trading where they buy in cash and sell in the future because there's no premium, therefore, no arbitrage opportunity. Something is happening which people have not realized. Now, I think that could be the opportunity which the bears may be waiting the following week. The third week of every month is a very crucial week for many, many reasons. Now, this week is also the expiry of the options, monthly options in the US. Typically, on the Thursdays and Fridays of the third week, that is 75% of the time I have observed, is that the market, Indian market is weak. Now, I don't know what the correlation is, but it is weak 75% of the time on Thursdays and Fridays. So the other 25%, it is bullish. Okay. Now, in such a case, when there is no premium, that should be a cause for concern for anybody who is taking a bullish view and thinking 24,000 is just around the corner. If you look at what's happening, especially in the European markets are extremely weak, led by France and followed by Germany and then England. Now, while the US markets are okay in more ways than one, because the Magnificent Six are holding up the markets, especially Nasdaq and S&P, the Dow Jones, even though it opens weak, invariably closes much higher than the lows. So today too, it opened more than 100 and odd points, 150 points. Now it's just down by only about 60 points. So it's already recovered 100 points. So it's quite possible that Dow Jones may recover as it has done in the past, and S&P and Nasdaq may close in the positive. Now, the data there is again very intriguing because the number of new lows are really increasing every passing day, while the Nasdaq seems to be making a new high every day. This is what we call divergence. And divergence coming at the top end of the market has to be very carefully viewed, because when the reversal happens, not if, it is when the reversal happens, it will be very swift and will catch people off guard. Now, the same similar thing is happening in India, where the indices are going up, the stocks are going up in the cash market, but in the futures market, there is no follow up buy. So, what it means is when the reversal happens, it will be very swift and severe in even in Indian markets. So, one has to be very careful in what we buy, how much we buy, especially in this third week. And I have studied uh, market tops for the last 30 years. Invariably, the tops happen in the third week. Now, I don't know why it happens, but invariably, the significant fall happens in the third week of the month. If you take right from Harshad Mehta of 1992, 1994, 2000, 2008, 2015, even 2021, the last one, when in 2021, when we had a fall, happened in the third week of October. So this third week phenomena is a very strange phenomena, but it is a phenomena which is factual, which is what has happened. So I would be very much more cautious next week. I've been cautious for the last few weeks. I'll be much more cautious next week, because the patterns are suggesting something is not as good as it seems. Now, whether it is a false alarm or whether it is the real deal, we will know unfortunately only by the end of next week. So if I was a trader, I would put stop loss of yesterday's lows and then trade on the long side. So it is not too far away. The stop loss of yesterday's lows, if you put, is about 100 and 150 points. But when the reversal happens, in my opinion and my analysis, the reversal could be much more than 100, 150 points. It could even go up to 1,000 points. So I am just going to be very, very careful, look at it very closely, and do my trades. So, and again, another thing is that the asset classes which are outside the equity, you take the US 10-year yield suddenly is again shot up from 4.18 to 4.29. While gold and silver have maintained their steadiness, US dollar has gone up. The DXY has now crossed 105 and it's gone, I think, to 105.40. Then you have the oil, which was around 77, 78 just last week. Now it is talking of 83 plus. So all these portend something big is going to happen in the next few days. And while the bulls would want it to go to 24,000, one should not be surprised if it comes down by 1,000 points from here. So the risk reward, in my opinion, is 500 points on the up and 1,000 points on the down. But that risk will come into play only if and only it breaks yesterday's lows on a closing basis. So I will come back tomorrow morning with much more analysis based on what happens today and what happens to the Asian markets tomorrow. But till then, just go through, do your homework, and see where you're making profits, where do you want to book your profits, or where do you want to enter into stocks. Just keep this in mind that something is on the horizon which is going to be very big. It's either going to be 24,000 as the bulls expect, or it could be 22,500 as the numbers indicate, and which can happen. It is not an impossibility to go to 22,500 in the next 1 week. It could also happen that you go to 24,000. So the choice is yours, what you want to do. But whatever you do, I hope you are successful. Thank you for joining me. It's Vijay signing off. I am not a SEBI registered advisor. If you like this kind of analysis, kindly like, subscribe, and share. Thank you very much. Good night.